Learning objective number 1 is to understand the basic approach in activity-based costing and how it differs from conventional costing. When cost systems were developed in the 1800s, the emphasis was on simplicity because 1. Cost and activity data had to be collected by hand, and all calculations were done with paper and pencil. 2. Most companies produced a limited variety of similar products, so there was little difference in the overhead costs consumed by each product. In the interest of simplicity, companies often established a single overhead pool for an entire factory that used direct labor as the allocation base. Direct labor was the obvious choice because 1. Direct labor information was already being recorded. 2. Direct labor was a large component of product costs. 3. Managers believed direct labor and overhead costs were highly correlated. Conditions have changed in 3 ways. 1. Most companies sell a large variety of products that consume differing amounts of overhead. 2. As a percentage of total costs, direct labor has been shrinking and overhead has been increasing. Many of these growing overhead costs may not be correlated with direct labor. 3. Technology advancements have reduced the cost and complexity of gathering diverse sources of data. 4. A plant-wide overhead allocation system may not be optimal for many companies in today's business environment. These changes suggest that a plant-wide overhead allocation system may not be optimal for many companies in today's business environment. Many companies use departmental overhead rates instead of a plant-wide overhead rate. The nature of the work performed in a department will determine the department's allocation base. For example, 1. Overhead costs in a machining department may be allocated using machine hours. 2. Overhead costs in an assembly department may be allocated using direct labor hours. Departmental overhead rates will not correctly assign overhead costs in situations where a company has a range of products and complex overhead costs. This is because the departmental approach relies exclusively on volume-related allocation bases. Some overhead costs may be caused by factors that are not related to the volume of production. A more sophisticated approach, such as activity-based costing, is required to account for these other factors. Activity-based costing is a technique that uses numerous allocation bases in an attempt to assign overhead costs more accurately to products than the plant-wide or departmental approaches discussed thus far. The basic idea of ABC is as follows. A customer order triggers a number of activities. Performing the activities consumes resources. The consumption of resources incurs costs. An activity in activity-based costing is an event that causes the consumption of overhead resources. Examples of activities include A. Setting up machines, B. Admitting patients to a hospital, C. Billing customers, D. Opening an account at a bank. An activity cost pool can be thought of as a cost bucket in which costs related to a particular activity are accumulated. An activity measure expresses how much of the activity is carried out, and it is used as the allocation base for applying overhead costs to products and services. Activity measures may or may not be related to volume. An activity rate is a predetermined overhead rate in an activity-based costing system. Each activity cost pool has its own activity rate that is used to apply overhead costs to cost objects. Taking each activity in isolation, this system works exactly like the job order costing system described in Chapter 2. A predetermined overhead rate is computed for each activity and then applied to jobs and products based on the amount of activity consumed by the job or product. In most companies, hundreds or even thousands of different activities cause overhead costs. The challenge is to select a reasonably small number of activities that explain the bulk of the variation in overhead costs. Activities are usually chosen by interviewing a broad range of managers to find out what activities they think consume most of the organization's resources. Related activities are frequently combined to reduce the amount of detail and record-keeping costs. For example, several actions may be involved in handling and moving raw materials, but these may be combined into a single activity titled material handling. An activity dictionary defines each of the activities that will be included in the activity-based costing system and how the activities will be measured. A common framework for combining activities in manufacturing companies is as follows. 1. Unit-level activities are performed each time a unit is produced. For example, providing power to run processing equipment is a unit-level activity. 2. Batch-level activities are performed each time a batch is handled or processed, regardless of how many units are in the batch. For example, setting up equipment and shipping customer orders are batch-level activities. 3. Product-level activities relate to specific products and must be carried out regardless of how many batches are run or units produced and sold. For example, designing or advertising a product are product-level activities. 4. Facility-level activities are carried out regardless of which customers are served, which products are produced, how many batches are run, or how many units are made. For example, heating a factory and cleaning executive offices are facility-level activities. Using activity-based costing, the manufacturing overhead costs are allocated to products using a two-stage process. In the first stage, overhead costs are assigned to the 6 activity cost pools shown on the slide. For example, the production order cost pool may include the salaries of engineers who modify products for individual orders, and the costs of scheduling and monitoring orders. In the examples and assignments in this book, the first stage cost assignments have already been completed. In the second stage, the costs in the activity cost pools are allocated to products using activity rates and activity measures. For example, if the total cost in the production order cost pool was $450,000 and the company expected to process 1,200 orders, the activity rate would be $375 per order. Each order would be charged $375 for production order costs. Notice the example shown on the slide includes 2 unit-level activities, 2 batch-level activities, 1 product-level activity, and 1 facility-level activity. Comtech Incorporated makes 2 products, GPS systems and phone systems. Recently, the company has been losing bids to supply GPS systems to lower-priced competitors. The company has been winning all bids to supply phone systems. For the current year, Comtech has budgeted sales of 50,000 phone units and 200,000 GPS units. Comtech's traditional cost system applies manufacturing overhead to products based on direct labor hours. Both products require 2 direct labor hours to complete. The phone units and GPS systems consume 100,000 and 400,000 direct labor hours, respectively, for a total of 500,000 direct labor hours. Materials cost $90 per unit for the phone units and $50 per unit for the GPS units. Labor costs $20 per unit for both the phone units and the GPS units. Total manufacturing overhead costs for the current year are estimated to be $10 million. Using a traditional predetermined overhead rate based on direct labor hours, we divide $10 million of estimated overhead by 500,000 direct labor hours to yield an overhead rate of $20 per direct labor hour. Since each product requires 2 hours of direct labor, $40 of overhead is assigned to each product. Using the information provided thus far, the unit product cost of each product, $150 for phone units and $110 for GPS units, would be computed as shown. Learning objective number 2 is to compute activity rates for an activity-based costing system. The ABC project team at Comtech has developed the basic information shown on this slide. We calculate an activity rate for each of the 6 activities by dividing the estimated overhead for an activity by the total expected activity. For example, the activity rate for production orders is $3,150,000 of overhead divided by 1,200 orders, resulting in an activity rate of $2,625 per order. Learning objective number 3 is to compute product costs using activity-based costing. We assign overhead to each product by multiplying individual activity rates by the expected number of activities. For example, for machine setups, we multiply the 3,000 expected machine setups by the activity rate of $400 per machine setup, resulting in $1,200,000 of overhead assigned to phone units based on the machine setup activity. We complete the same overhead assignment for the other 5 activities. We then add the overhead for the 6 activities to determine the total overhead of $4,890,000, which will be assigned to phone units. Next, we calculate the overhead cost per phone unit by dividing $4,890,000 of overhead by 50,000 phone units. The result is $97.80 of overhead cost per phone unit. We follow the same procedure for GPS units. For example, we multiply the activity rate of $400 per machine setup by 1,000 machine setups, resulting in $400,000 of overhead assigned to GPS units based on the machine setup activity. We use the same overhead assignment for the other 5 activities and then add the amounts to find that we have assigned a total of $5,110,000 of overhead to GPS units. Next, we calculate the overhead cost per GPS unit by dividing $5,110,000 of overhead by 200,000 GPS units. The result is $25.55 of overhead cost per GPS unit. Note that assigning overhead using activity-based costing results in a decrease in the unit product cost of a GPS unit from $110 to $95.55, and an increase in the unit cost of a phone unit from $150 to $207.80. Note that direct material and direct labor costs under the 2 approaches are the same. The differences in the total unit product cost are a result of the 2 different approaches to assigning overhead costs. Learning objective number 4 is to contrast the product costs computed under activity-based costing and conventional costing methods. The ABC system assigns $14.45 less overhead than the traditional system to each GPS player. $40 minus $25.55 equals $14.45. The ABC system assigns $57.80 more overhead than the traditional system to each phone unit. $97.80 minus $40 equals $57.80. Activity-based costing shifts costs from high-volume products produced in large batches to low-volume products produced in small batches. This occurs because of the existence of batch-level and product-level costs. The traditional system assigns the same amount of all overhead costs, including the costs related to production orders, to each GPS or phone unit, $40 per unit. Consider the production orders activity cost pool, or a batch-level cost pool. The ABC system assigns different amounts of production order-related overhead costs to each product. This fact can be illustrated in a 2-step process. First, compute the number of units processed per production order for each product, 62.5 units for phone and 500 units for GPS unit. Second, compute the production order cost per unit for each product, $42 for phone unit and $5.25 for GPS unit. Notice, the costs are being shifted from the high-volume product, GPS units, to the low-volume product, phone units. One of the great benefits derived from an ABC system is that it can help identify areas where the company can benefit from improving its current processes. Activity-based management focuses on managing activities to eliminate waste and reduce delays and defects. Activity-based management is used in organizations as diverse as manufacturing companies, hospitals, and the U.S. Marine Corps. The first step in any improvement program is to decide what to improve. The theory of constraints approach discussed in the prologue is one tool for targeting the highest impact improvement opportunities. Activity-based management provides another approach. Activity rates can be used to target areas where costs seem excessively high. Benchmarking can also be used to compare activity cost information with world-class standards of performance achieved by other organizations. Activity-based costing improves the accuracy of product costs in 3 ways. 1. It increases the number of cost pools used to accumulate overhead costs. 2. It uses activity cost pools that are more homogeneous than departmental cost pools. 3. It assigns overhead costs using activity measures that cause those costs, rather than relying solely on direct labor hours. Some activity measures may be unit level in nature, while others may be batch level, product level, or facility level in nature. 4. Activity-based costing also highlights activities that could benefit most from process improvement efforts. The cost of implementing an ABC system may outweigh the benefits. However, the benefits are more likely to be worth the costs when 1. Products differ substantially in volume, batch size, and in the activities they require. 2. Conditions have changed substantially since the existing cost system was established. Overhead costs are high and increasing, and no one seems to understand why. Management does not trust the existing cost system, and it ignores data from it when making decisions. The cost in each activity pool is strictly proportional to its activity measure. When this assumption is violated, the accuracy of ABC data can be called into question. For example, managers should be particularly alert to product costs that contain allocated facility-level costs. The illustrations in the chapter assume that ABC is being used for external reporting purposes. If the system is used for internal decision-making purposes, 2 important modifications should be made. 1. Selling and administrative costs should be assigned to products where appropriate. 2. Facility-level costs should be removed from product costs. End of Chapter 4.